Awesome. Well, we'll give people a minute or two to jump
Yeah.
on, but first off, I'll just introduce myself to our folks in the audience. My name is Emily. I sit at Venture Partners at CU Boulder. We work to commercialize university research, all of the great innovation coming out of the university. And we do that through corporate partnerships, as well as startups, venture development, and small business development. It's a pretty fun spot to be. We have so many interesting technologies that we're looking at. And Kira, I'll give it to you to introduce yourself, but I'll just say I really love thinking about my work and the work that we do within Colorado as a full ecosystem. I came from private capital, private investment into the university and have been learning a lot. And I really think that all of these different players, public, private, university, nonprofit, really all come together to make up an interesting ecosystem.
Yeah.
So, Kira, maybe let's start off with a quick introduction of yourself and maybe just a brief overview of B Partners, and then we can get a little bit more into the nitty-gritty of what you all do.
Yeah, sounds great. And thanks, Emily, for inviting me to do this. I'm so excited to be here. And so a little background on me. I grew up in the Bay Area. In my prior life, I was a software product manager, worked on like 12 different go-to-market MVP products. So MVP implies very early stage products getting to market. And then I met my team at B Partners when I was getting my MBA at business school. I was over at UC Berkeley. And have been now with this team for 6 years, rose up from an intern and now I'm a partner, and look at B Partners. So we invest in pre-seed founders, meaning, probably folks in this audience, it's like folks with an idea and maybe that's all they have. It's pre-revenue, pre-product, really, really early. And then what we look at, we have this worldview that machines will win. And there's this perfect balance of human machine interaction on any one opportunity. And I think the upshot here is we don't feel like it's at the expense of humans, the way we think this is actually a collaboration. And so what that translates to on a more tangible level is that we look at deep tech. What that means to us is anything really on the technical cutting edge. And, I could give you examples, but really it's like space, drones, blockchain, et cetera. But where I focus personally is two areas. One is robotics and automation in industrial settings. And then the other is synthetic biology, platforms that are often food focused, more so than say like the medical therapeutics type of angle.
Great. That's awesome. Well, thanks for the brief intro. And sounds like a really interesting path through startup world and into investing. I personally admire seeing more women holding the purse strings in VC. So I love that. So maybe let's kick it off with a little bit more about B Partners' investment thesis, and really this idea of machines will win and all of the aspects that plays into. I really find it interesting that you all are on this pre-seed level. So can you talk a little bit more about what kind of stage of companies or stage of founders you're looking for, and how they kind of plug in with you and what your capital helps them to achieve?
Yeah. So at a high, from a big picture, I feel like it's a privilege to have the job of the the founders that we're investing in. We're helping them get from 0 to 1. And when I refer to 0, it's like, hey, you just decided you're going to approach this problem and build a business. And like the 1, and it looks really different in deep tech than say enterprise SaaS. So we can talk about that, but like the 1 in deep tech, if you were talking about software, you'd say, well, product market fit. But the difference of a lot of these deeper tech solutions is that what it means to get to 1 is often having maybe a prototype or a couple early samples of a product you're producing, whether that, but biorobotics doesn't matter. It's like you're actually just like producing something and saying, okay, there was some technical scientific innovation, but we're actually showing ourselves and our investors that we can build it and that we have some gauge on unit economics, let's say, where then whatever vision we painted of the future, like we know we're on that path successfully. So yeah, I mean, and also the way the investors or the founders that we're partnering with, I use the word partner intentionally. I mean, we only invest in maybe 6, 7 new companies a year. And so we take board seats, we lead rounds. I mean, I talk to the companies that I'm closely working with every week. So we're really, really hands-on. And that's actually, not your average investor, because it's not necessarily set up that way. You have to build a firm in that image. Mm-hmm. So anyways, we're really hands-on. I can give you guys examples of what I mean by that, but like, that's a really big part of the way we invest.
Yeah, that's great. I really like that notion of when you get into a relationship. I really like to coach that this is, a very long-term relationship with an investor, and especially in the early stage, there's so much value that outside investment firms or startup accelerators, or even in some cases non-dilutive funding, so much that these equity investors can contribute that isn't just financial capital that can really get you off the ground. You're not just looking for money, you're really looking for a partnership, which I appreciate.
And I would just add one thing, which is there's a way you could hear what we just said and say, well, maybe that's a little more true for a first-time founder, let's say, versus say like a serial entrepreneur. And like, actually, my experience of like the value of that partnership is the more seasoned the founder is, the more they actually appreciate it. I mean, the first timers really need it too, but the concept of like, it's like friends of mine, it's not about be partners. If I'm giving them advice, I'm like, you're solving for a handful of things, but partnership, if it were me, would be at the top.
Yeah, definitely. That's building the network and knowing the people and all of that social capital is a very big part of it.
Yeah.
So you brought up kind of this some of the unique challenges that I think some of the researchers in our audience probably feel, or at least will, as they begin their commercialization journey. And I think, a big part of that is finding the right market to enter, finding the problem that fits the solution that you've spent so much time building or researching in your university lab. Can you talk a little bit about with your stage companies, these companies that are in your portfolio that you're talking to every month, what does their product journey look like, and what kind of timelines do you see them working with, and how do they kind of overcome those challenges?
Yeah. Great question. And so, I mean, I think from the starting point of how you asked it, like deep tech is deep. It's harder, everything's hard, but I think it's harder than your average company for sure. And it's because there's often lower margins because of often the CapEx involved in building these solutions. You certainly have longer sales cycles, just because of inherently who that customer set is. There's really complex supply chains that COVID's shown a light on. There's certainly regulatory hurdles. And in the end, too, when you think about exit, there's fewer acquirers, and there's also fewer analogs of what success looks like. So you're really like, you're at the forefront with your tech, but you're also at the forefront of the narrative on the tech, right? Sure. So anyhow, right? So deep tech is hard, I suppose. It's just the simple of it. And your question was kind of like, given all of that, like, how you, like, I mean, is it kind of like advice in that regard, or like, remind me what question?
I love that direction as well. Where I was taking you was around kind of product development and product building on this pre-seed side of things. What milestones do you look for the company to come into you with? And then what do you hope that they achieve in the first X, the X amount of months or years that your runway gives them? Okay.
So great question. I'm going to like answer it, but I'm also going to back up a step.
I love it.
So the backing up a step is like, okay, I mean, to me, and like, this is an important note for all the technologist founders. I mean, to me, including like business is about people, and that includes deep tech, right? And when I say that, what I also believe is that business ultimately is about solving problems. And so for us to talk about milestones, to get to that conversation, like the backup step is, okay, well, what problem are you solving? Whose problem is it? How big is that problem? And like, that sounds like I'm talking about the pitch and how to pitch it, but I'm not. I'm saying like the pitch is your precursor to building that business. And that's why investors push you to pitch well in those areas. So, I mean, I think what's tricky is like, I think any good investor, but certainly my team and myself, like I'm allergic to tech in search of a problem. And like, that might be, like not sound like super friendly, but I don't believe that's how good businesses are built. That like, hey, I have this really enabling technology. Like, let me throw it out there and someone will tell me how to create value. It's like your job. And even as a scientist, if you're starting a company, right, and you're a C-level CEO or the co-founder, I mean, it's your job to, and I think also I'm saying like, figure out how this applies. And I know how hard it is. And so I've given a lot of advice to technologists who are like, do have something really powerful. And I'm like, look, I mean, as all the stuff I look at, I still can't answer this for you, but I can tell you how I think about it. And so, I mean, one exercise I'll coach founders to go through is defining the ROI for the customer or whatever the next closest analog, maybe it is automated today, but like defining the ROI saved and the increased value, increased productivity and quality, or like kind of, this is specific to a solution, but big picture, what is the value you're truly bringing? And I think the key is that's a unit economic type of way to think about it, but that's today. And then, but what's really important, because you will not be anywhere near scale. Like, for example, enterprise SaaS, you should be like scaling at Series A. Deep tech, you're getting products in market, like, and at pre-seed to seed, you're getting like, you're validating that that's the right product to then finally get your first batch of like 100 chocolate bars. Let's say one of our companies is producing a fats platform in the lab, and then it'll apply to food, cosmetics, etc. But it's sort of like, so there's the difference of like, so what you're trying to get done. So essentially like, okay, well, whose problem am I solving? How much of a difference does it make directionally? Like, is all of this correct? And also I'd say one other thing before you jump into like milestones is, and I sort of spoke to this, like you want to show that that the market is like, if the problem is big, the market is big. So you want to say in 10 years, I can show you a revenue model, and it's not about the specifics. It's more the assumptions baked into that model of how you can capture $1 billion in market share over that time. And then there's different ways it should, and like, there's different ways it should look like in enterprise SaaS. It's sort of, there's like something like triple, double, triple. There's some like way that you look at companies that are high growth, how they look. Deep tech's not quite the same. It's a watered down version of that. But all I'm getting at is if the problem's big enough, and then you can backtrack and say, this would be like the pace I would need to be if this company in its essence was venture scale. Okay, so you've laid all that groundwork. Then we get to your question about milestones. And then the milestones.
We love the groundwork, by the way. Everything that myself and my partners who produced this series, our first step with university researchers is going out, talking to customers and validating a problem for your solution.
Yeah, right.
Which is, always the step one. So thank you for highlighting that.
Yeah. And it's sort of like, and so then from there, okay, so then you ask, all right, well, all that's done. And then you got investment money. How do you think about that first, let's call it a 2-year window of time to execute? Mm-hmm. I think it's different, but in every business, and the high level that I would say is like, there's a bit of on the deep tech side of going slow to go fast, meaning in robotics, as an example, there's a company that's in our portfolio that's going to have 100 robots in the wild in factories by the end of the year. And they're at like 50 today. But when they did their pre-seed to seed, all they were doing was getting 3 robotic arms across 3 different customer sets and like domains, basically like enough of a diversity of like the environment where they were learning so much. It looks like they went slow, but actually like the speed of how they were ingesting like their learning, and then from there developing the tech and the product further, like transformative, game-changing, like, so that's a really common way that we'll, encourage founders to approach their path to market is just knowing, like what what your ideal learning petri dish looks like. So that's really important. Where it's so, and I guess another way to say this, like, it's not when I'm saying it like that, it's not about the revenue dollar, right? It's like, what you're trying to tell is the story of what you've been learning. And like, one day that translates to revenue, but how are you de-risking that in these early deploys? And then, okay, from those learnings, what's really important about scale, and deep tech is hard to scale, is like, how do we build, there's a lot around flat platform, but kind of like, how do we, from one thing, bake that learning into the second thing we do, and then the third. So there's a lot of like, if we go slow enough, we can like architect our solution in that image.
Yeah. I love that, the petri dish. We like using scientific analogies to work on business building as well.
Yeah.
It really is one and the same. It's not that
Yeah.
scary.
Yeah.
I love the petri dish and this idea of kind of early pilots or early partnerships to really help test, you know, the MVP. And I've heard it said before that if you look at a lot of like kind of the growth trajectory of software companies, it's the hockey stick growth, maybe it's the small valley of death, and then you're really exponential. And I've seen the visualization of some of these deep tech hardware type companies, more of a step function. You have this long valley of death or kind of time with no growth. But then once you're able to, you know, validate, grow the petri dish, find your second and third markets to enter, you really have overcome the technical hurdles and your market risk isn't so challenging. So you're really off and running. So I find that really exciting. I think I find it really exciting. And at the same time, I find it, and this is why this conversation is so interesting, not always compatible with the traditional VC capital deployment view. So how do you all handle that at B Partners in terms of, you know, timelines or the level of risk you have based on how long your capital is invested in a company? What does that look like?
You've said some really interesting things here. I mean, one is that when we think of any one investment, we're really asking ourselves the question of, is this, I mean, we look at deep tech. So primarily we're taking a tech risk and these are known markets. Like 20% of the time we flip that and it's just about diversification on our side. But like that point, your point's perfect. And your tech risk is also really front loaded. But then also, like you said, it's like, then once you de-risk a lot of that, like basically Series A and beyond, because usually by Series A, you're fine. It's like, you're kind of the way a seed company in software's early product market fit. You're like finally at that point. It just takes longer to get there, but then your efficiencies might in the end be more advantageous. Depending, you know, again, all of this is specific to the solution, but like, you know, with this robotic one, for an example, it's like, cool, now there's economies of scale with how they're sourcing all the, you know, parts that form the solution. Now, like, we built a lot of customer trust where the sales cycle is lower, you know, and now like the investors who, you know, 5 years ago were a little more freaked out by robotics because there's a lot of failures to be seen. There's more success cases and they're part of that story, but like that's making their lives easier too. So anyways, how do we think about this from like, I mean, this is our sweet spot, and yet we're normal with all the normal structures of a venture fund. And for us, there's no super clean, simple answer, but, you know, one is we're aware of it. And so the stories we're telling to people, they're called limited partners or LPs who give us money. You know, they know our focus. I mean, that's how we pitch them when we're raising our fund. We're saying, this is deep tech. This is what deep tech looks like. And you know, this is why you want it. It's actually pretty different than the other stuff you look at, but kind of like the stuff we just talked about. So when we socialize it too, you know, something any VC can do it, but the ones I know doing it are in deep tech, which is you can extend a fund cycle. So typically they're 10 years, but something we've done, and I imagine we'll continue to do, is like you can extend it by a year or 2 years at a time, and you can do that a couple times. So there's a way to extend it just by nature of how these companies are built a little differently. This is where it's like, there's not a crazy in-depth answer other than like, we believe in the thesis, we have data points to believe it. And so therefore you have to like make room to operate with that strategy.
Yeah. You know, it's so interesting because I think a lot of the kind of pattern matching of this is what a successful investment looks like are those hockey stick growth companies, the ones that move fast, the ones that don't need so much upfront in terms of time and money and other resources to actually prove something out. So it's great to see, especially someone local doing that for our companies and coastal companies. So that's really exciting. So going back, I really liked this point that you had said kind of in this pre-seed stage, you're not looking to make sales. You're not necessarily thinking about revenues as a really early stage deep tech founder. How do you advise your companies that are coming in and working with you on establishing that early traction, whether it's through the partnership or a pilot? Like what do those relationships look like? The petri dish.
So one piece, and you sort of use this language, but we use it a lot, is the concept of a launch partner. And like, I'll give you an example. One of our bioplastics companies partnered with a handful of corporations that includes AB and Bev. And so they have this plastic resin, but to make the value from the resin, you have to produce, keg caps to cutlery to and, right? Like you need an end product. And so showing that they, and the launch partner concept is not just for, it sounds geared to the startup and it is, but what you're looking for in that partner is like, they have a lot to learn too. Like they're de-risking something they hopefully otherwise still wanted to learn about. So, you're looking really for like the win-win relationship, which my experience is it's very out there. You just have to be pretty savvy to thread the needle. And then I would say too, what's really tricky about pilots, because if you are like, hey, I'm here open for business and I've got like, kind of like, hey, I have this awesome business, this thing. And do you want it? A really important line we draw is like, well, are they paying? Is this a paid pilot or not? And it's not about the dollar amount, but it's like, because if you're giving away something for free, that you're inherently implying like there's not a lot of, I'm not throwing a dollar amount at it. I'm not actually saying what it's worth. And so I guess the other part of this is like, even if, and again, like, doesn't totally matter the amount, but you do want to charge something. And there's another element too, like the launch partner concept is good because you basically are figuring out pricing, you're figuring out a lot, and you've got someone who like it's low cost to experiment with, where normally when you get to market for real, it's really hard to walk people up on price. So kind of like often the approach is saying, well, we'll take this a premium direction and then expand the market and say, we'll go to the, middle to lower, but we really want to start here. And it's partially because of that pricing challenge. So there's that part. And I think what you're trying to show is just like, often you're showing the tech gains early on and like that, how a partner is responding, that matters. So you're like validating that the tech, like those deltas matter. But like, what's really exciting to me in some of our companies is whatever milestones they laid out, sometimes we're, over double the pace that we intended to be to hit those milestones. So if you can show just like how on fire that technology is, and it's like, this is just the objective experience, like often it's actually even better than what was pitched. That's pretty exciting because then it's just on a simple level, it's just painting like the picture of what this business could be even bigger. What else can I say? Yeah, the early Petri dish, it's a lot about moving fast because at the very beginning of a business, you have two levers, you have time and money, really. And when I say moving fast, it's like a mix of capital efficiency. Am I using my money well? Also, we have limited team size. So kind of like, is everyone doing their most value add thing that they could be doing for this business? And the person, for a zoom out of who should be deciding that, really the dictating what impacts this the most is like, and this is where we have to decide, do we believe in the CEO? Because it's really strategic on even on these like incremental week by week, how the team is operating, it's really strategic how this team is being assembled and how they're being directed. And so if you're focused on the right thing, like say tech is going great, there's launch partners helping you. And then also you've got the vision that like, yeah, these are the right things this quarter to de-risk. And the next quarter, it's going to look a little different. And here's why. It's like always having a why to how you're doing it. And like working with someone like me who like, I will jump into the trenches with you and work with you on it. I'm not saying like show up and give me everything, but you want like, I really like when founders like know their why and are like, just have that pulse on what should happen when. Because again, it's two levers, just time and money. That's it.
Yeah. Yeah, that's a great emphasis. And the resource challenges for these types of companies is acute and creates some great opportunities like we had kind of talked about.
Yeah.
So I'd love to back up just a little bit. We talked about, from your perspective, really needing to, be problem oriented and really solving something out there. For maybe our university researchers in the audience or watching this later, what do you look for as a pre-seed investor that they have completed in order to kind of go out and raise their first round of funding?
Yeah, it's a great question. I think a simple way to answer it is that you want it to be the scenario where if I'm given the money tomorrow, I would know exactly how to use that money. And so I guess we're kind of pointing to a use of funds slide, but like it's more than that. It's like would you be able to like pour gas and light the match and be ready to be on that rocket ship? And again, even at pre-seed, sure, the rocket ship looks different, but the point is, can you like, are you mobilized for that? And I think like the other way to think about it is, are you at a point, like, I think the exercise that any founder should go through is, how much learning can I do without taking capital in? Because the concept is you don't really want to learn on someone else's dime, unless it's like, if you want to do that, do an accelerator. Like there are options, like, you know, it's okay to be in that place. But for a VC relationship, you want to be like, even if you pivot, which we're expecting, but kind of like your game plan should be really baked. Even on, and again, this is still for a pre-seed, maybe you're just out of a lab founder. Like I just invested in one out of Berkeley a month ago, that it still applies.
Great. That's helpful. And, you know, I think a lot of conversations that we have with our teams, especially from tech that originates in a university, is building out that team. And I really like this idea of, are you ready for the rocket fuel to go to the moon?
Yeah.
How do you work with teams either coming into you or that are in your portfolio around team? I think we see a lot of technologists who are interested in becoming business people. I think we probably see more technologists that are interested in staying technologists.
Yeah, which is totally fair, right? This is their life's mission. And so, yeah, I mean, team is really tricky. I'd say at the, you know, pre-seed, and I'll qualify pre-seed as being very different from seed in terms of investor expectations. And I also think that's why there's fewer pre-seed investors. The risk is highest at the pre-seed. That said, as a pre-seed investor, you know, we're often, it's an exception if we'll invest in a solo founder. So I'm going to leave that out for now. So what we're really looking for is a yin to your yang. So we're talking, you know, this audience is the deeply technical type of founder, you know, more likely a CTO than a CEO. And like, to your point, by their own volition. I'm not trying to minimize any technical person that says, no, but my job calling is really to be CEO. But like, let's just go with the like common feeling, which is they're probably going to want to stay in their domain. And so with that, then your next step, and something I help with a lot, is we call it, and you talk about partnership and like the relationship, but it's like co-founder dating. And so, I mean, for us, like there's certain technologies we know so well that we'll basically invest and say, we'll help you find that co-founder. But more often it'll be the case where we'll support you, but we would only get comfortable investing once you have your yin to your yang, to the point we talked about of like, go, you know, getting a running start out the gate and all that point about speed. So, I mean, I guess the bottom line is like, it's, you got to know yourself. And from that place, you know, make the decisions. But I think pre-seed typically really does look like two founders. I mean, maybe one or two first hires beyond that, but like it's really small team. And I think too, another piece of the co-founder part, because like, it's easy to want to have a shotgun wedding. You know, you're like, my life's work is this technology. And like, let me just like find the business person and like, and hey, isn't business easier than say a deep tech? I would make the case, particularly to this audience, as brilliant as I know you all are with your like technology, I would argue business building is like just as hard. Commercializing deep tech, I think, is just as hard. And that's why we emphasize the yin to the yang at that starting point. And like we talk for all kinds of reasons, but it is harder. So I'd say that part's really important. And I'd say one other thing we really look for with founders, and this is often we're hoping, you know, I mentioned co-founder dating. So maybe you've known them for 3 to 6 months, or maybe you've known them for 10 years, whoever. But like the concept of being able to fight well, and that's so important, because just like the investor founder relationship, we think of it like a marriage, that we never want to get divorced, by the way. And so, but we're also thinking at co-founder, same thing. And for the record, I've been on companies, their board, where then there is some co-founder leaving, and it's always really, really hard. And so essentially, like, how you avoid that is, you know, doing your best to vet them. But the best way to do that is like, you actually have a working relationship before you formalize the partnership. So like, if it was a three that, like, for example, this is a guy who's a biologist, and how I want him to vet his potential CEO, you know, we've given a lot of thought to his go-to-market plan like what you were asking and how this technology is applied. We've thought about it, and whoever the CEO is that comes in, like that's going to be their torch to carry. So like working with someone over a span of months to brainstorm, to like work with them on the plan that they would actually build. That's so different than an interview, right?
Yeah.
So yeah, just like a strong fabric of connection we really look for.
Yeah, that's great. And the long-term approach and really making sure there's too many marriage analogies in this world.
I know. It's like it's too much, but it's so accurate.
There's a lot, but it is valid. That's great. So we've really, we've covered this kind of value proposition, this super early kind of idea stage. We've covered building the team. We've covered, when and why you would really look to outside capital to start this. We at the university level work with a good mix of non-dilutive funding, and then figuring out when to bring in the rocket fuel, bring in the equity funders.
Yeah.
And we've talked a little bit about what B partners and some of these other pre-seed early stage investors can do in terms of non-financial capital to support. So we're well on our way to scaling our companies, everybody.
Yeah.
One point that you had brought up a little bit earlier was that you end up seeing a lot of platform technology, and I've seen that as well, these different ideas that could be applied to so many different industries, markets, bring a lot of value. How do you help your founders balance kind of finding that beachhead, being hyper focused while still seeing the moon and seeing the 10-year, 15, 20-year vision of their tech?
Yeah. So, and this is where it's so, I think some of the highest level of value we can bring is like when the company's DNA is coalescing, being, solidified, right? As this team's coming together, it's like that we can be sparring partners to help the founder. It's like more than just like thinking that way. It's like, are you building a business in that image? So kind of helping them, it's not like they're driving, but like being that checkpoint that is it's not like as much friction as this sounds like, but like forcing the issue of like, all right, let's make sure we're like looking at this, even as we're crushing whatever tech thing milestone we want to hit this quarter. And so another way so I do a lot of thinking and writing about this. I'll actually throw this in our chat and you're welcome to share broadly. It's called, I just wrote something about machine to machine learning, and it's all about a platform play. And so anyway, so like we collaborate a lot, but like what this paper outlines is also kind of like, it's a lot of like how we would actually give that advice. You really see a lot of examples and case studies, and like we talk about 3 waves to get to market. But to simplify, what I would say, and this, by the way, this paper focuses on like digitizing the physical world. So, and that applies to, robotics, that applies to biology. So it's like a pretty broad reaching scope of like what a platform is. Yeah. And essentially, I think there's 3 steps, often with deep tech. It can be at the starting point, is this solution automatable? Or like, is this problem automatable? And it might be like, I'll give the example of the robotic arm company, where the problem that they were tackling was you have this hardware, now it's off the shelf hardware, but you got this technology that once it's applied to one use case, like say it's machine tending, which is the arm taking something in and out of the machine. The really hard part about robotics is that, well, what about the next task and the next task? Because in factories, it's pretty dynamic settings, even the ones that are like high volume, low mix, which is sort of like as standard as it could get in terms of what you're doing. It's still very dynamic. And so what the automation question was like, well, can we have really smart software? Can we how do we rethink this? And it's like, okay, well, given where the technology is today, there is an evolution of the hardware where we can actually use off-the-shelf hardware. And the part we're automating is the software, we're calling it a task library, but the concept of once we do one task for one customer, that same task can be, not at 100%, but maybe at 60% repurposed for the next customer, right? And then there's synergies within one customer set included, other ways that same concept applies. So anyway, so there's okay, well, what is the automation to begin with? And is it possible? And is it a good idea? The second step is actually the MVP, certainly, in getting to market. And we talked about a lot of that. And what does that look like? And how close to the reality of the big picture does the MVP need to be? So there's questions like that, but that's wave 2. And then wave 3 is all about, okay, it's a mix of like you land in market and that's like your first, that's the go to market, but really what wave 3 is about is the platform. So, okay, you got to get to market to have the beginning of a platform, but really what the platform is about is the next markets and applications and use cases. And so like the underpinning of these other, like when I'm talking about a flat platform and you're like one use case, two, like, right? Like that's to me, when I visualize a platform, that's what I'm thinking of. And, the way you do that, I'll give you a bio example is like, say microbe that's say producing, I told you about fats. It's like, well, how much diversity with the same microbe could we show of like the types of fats the same one could produce? And, that's a degree of efficiency. Or, maybe it's like, flip this and say, well, okay, same microbe, maybe it's like that same one end fat. How many different types of end products could that one fat be applied to? And so what we're doing today is like, even if it's a customer it's not about the revenue, it's like we're showing that second application. We're trying to give a precursor to like, this is how this becomes a platform, right? Beyond food, it's also cosmetics. And even like another way to think about a platform is like different customer types ranging from say startups, which are kind of a tricky customer type to sell to, but still can be very valid, to like a corporate, right? That's a huge range. And like, if you have a solution that makes sense and can serve kind of that whole range, or at least chunks of it, that's really powerful. And like the last example I'll give is like, we're talking about pilot scale versus production scale. And building a platform includes starting at the smaller scale and then expanding that technology to a larger scale. And so there's a lot of ways, at least for me, I would define being a platform, but the core concept is like vertical after vertical and having like a productized efficiency from what was built in that first one. Oh, cool. We're taking what we learned here. And so we're not starting at 0. We're starting at like, I don't know, 60%. And then, maybe the efficiencies are dynamic, but like you want to see that.
Right. Yeah. I love that balancing here's the 10 different industries we can go into this with here's the proof in the pudding in our first industry and how we can leverage that in the future. I think that's a good way to kind of tell that story. So let's zoom out even a little bit farther. I imagine your job is so interesting day to day, learning about these new technologies, seeing what people are working on. How do and really your job as an investor is to mitigate risk while seeing the world in the future and what it looks like that's different than today. So dealing with these breakthrough innovations, kind of these fundamental technological changes, how do you determine, like, what gets you excited? How do you determine what could be the big winner changing our world in 20 years?
Yeah, what gets me excited? I mean, I'd say, so many things, because like these two areas that I shared about, bio and then robotics, to me, there's a way bigger picture with bio, especially when you talk about food versus anything else. Like, we're talking a lot about mitigating climate change and carbon reducing activities. And so like, no, we're not an impact fund, but it brings me a lot of joy to know that the solutions that we're funding actually, just by nature of what they are, have that impact that just comes right with it. So I'd say like, that's exciting. And I'd say like on the robotic side of things at that very high level, for me, it's all about reshoring US manufacturing. And it's like, actually like robots aren't taking jobs. We have a 4 million plus labor shortage, but they can actually, humans need to learn some skills to work with the robots, but like, this is actually a way where there will be more jobs and actually better jobs for humans. Cause like the machine tending example as a really simple one, I don't actually think humans are best at that. Machines are way better at handling speed, precision, complexity, tedious stuff, right? Humans are really great at like flexibility, instinct, purpose, like, right? So anyhow, I get excited about that stuff. I also really get excited, and that to me is the big picture. Does this fit into the machines will win thesis? I also get really excited about like deep, the concept of how big these problems are. And I know I spoke to this, but it's like on our side, when we have stars in our eyes, it's because we think this, and we talk about this in any deal we invest in, is like, could this return the fund? And that might sound like such a VC, like bad, like maybe, it's like, there's a way VCs sort of look a certain way, but it's like, okay, but why? And the reason that's so exciting to us is like, we're going out of business if we're not returning capital. And so like, we actually functionally really have to think that way. And so what that ties to is like, is this a massive market? And when I say massive, I'm talking like 20 billion plus. And that also, it's like markets that have room. Okay, your one vertical combined with handful will be the reason that market size is probably that big. But I'd say just really, really big markets. I would say we have a term called problem founder fit. So it's sort of like a founder who was basically born to solve that problem. And I'm not saying like you had to study it at school, but it's sort of like you've got this deep insight from some firsthand experience, whether you're a PhD in a lab and you like are solving a problem, maybe you've been in industry 15 years or 10 and whatever it is, 20, and you're like, no one's solving this and it's a really big problem, but kind of like that. And I spoke to this a little bit before of like the strategy and like, does the founder like have that pulse that's going to like, because what you're basically doing is meeting the present moment, but then seeing around the corner. And so do they have that vision? And does it align with ours? Because like I do, that paper is an example. We do a lot of work to say, what do we think is actually really interesting? So like, we're not coming at this blind. We have a very prepared mind. So those are some examples. Obviously it's like, I would argue what my job is like 50% about the people. And it's not like, do I like the person? I mean, which I would like to like the person, but it's also like this deep market insight, this earned insight, like because when nothing is built, that's why so much more weight goes into the person. And it's, and again, it's not about like anything social. So to any extent, really, other than like, you got to be a resource magnet. There's certain social things that come with that, but like, it's more, like, is this like, would they be doing this with or without our money?
That's great. The drive and some of those intangibles, that's a hard line you have to assess in this pre-seed stage.
Yeah.
Well, I'm going to queue up one more question and then I'm going to open it up for Q&A for our audience. So if anybody has any questions that they would like to bring up, please feel free to share them in the chat. I'm going to bring up a topic that I'm really passionate about and is kind of my driving force in this space. And that's, that we're sitting in quite a minority, both in terms of for you being able to deploy capital as a part woman, female partner at a VC fund and working with technology as well. Do you have any advice or do you ever connect with underrepresented founders? And we all know the dismal statistics around being able to raise funding, both as a first-time founder as well as somebody from an underrepresented group, or even an underrepresented place, like being in Colorado instead of Silicon Valley. So how do you handle kind of diversity in B partners?
Yeah, I love that question. I've definitely led the charge for us in this area. And I've, some quick ways that I can tell you, like, we're doing the work. Because I think a really dangerous thing, or like in my mind is dangerous, is I don't know, talking a big game and then not doing anything. So I guess what I'm trying to say is like, we're action. I say like factus non-verbis, like we're action first, and then we'll tell you about it. But like, we're doing the work. And like, one, it's a big problem. Couldn't agree more. Like when it comes to women, it's maybe 8% female founders that are funded. B, we're about 40%. And like, no, we're not 50, but we're getting closer. And since I've been there, that number's jumped, maybe 15% or something. So one, it's like, I think another angle as well is about, on one hand, we just talked about the founders, and I have advice I give to founders all the time, like women or underrepresented. It's like being really comfortable advocating for your credentials, because if we're working with unconscious bias, then there might be ways people are kind of minimizing what you've done. And so being very proactive about kind of helping them go the other way and being very vocal there. Mm-hmm. I would say as well, on my side, there's a statistic, and I've done like presentations on this. I've really spent a lot of time with like women in particular, but the zoom out has been URMs. And it's like, how do we we have a big influence on our side of the table. And there's a Harvard Business Review data point that says there's a 25% difference in male-led versus female-led exits when there's literally like one female investor on the cap table that's meaningfully involved versus not at all, right? That's like a pretty specific way to look at it. And like a 25% difference in exit, like, wow. So I'd say something I do on my part is, it's not like I have this monopoly on our female founders. We're a 4-person partnership, 3 of whom are male and me. So it's like, we all, of course, are working with all of our founders. But something I do is maybe, other than I want to bring in syndicate partners when we lead around, we bring in other VCs around us, or say there's the next round after and we're helping them fundraise. It's like, I want more women on the cap tables, and because of the difference I shared, I think we can make. And I would say too, it's like, even if it's not equal by dollar amounts, something I've been doing lately is saying, we'll syndicate this deal with like my highest quality female angels in my network. And we're going to offer them no fee, no carry, meaning like if they want to invest, it's like they were investing out of our fund. Like they have no cost, like other than their dollars that they're putting to work. Where normally if you go through someone, whatever, you get the point. Like normally you're paying something. So we're like, okay, let's make this like free. And obviously but the point is like, can we get to 50% on the cap tables? And so like, I wouldn't say we're quite there yet, but like, this is something to get anywhere near what I'm talking about. You have to consistently do that. And so that's an example of something I've done and will continue to do. I'd say too, I just look out for unconscious bias. And I think I work with some of the best men around, and also like they're humans. And so like, I kind of like will ask myself the question, and if appropriate, talk to them of like, well, gosh, if a male founder had the same problem, would we be approaching it the same way? Would we say we might pull our check, or would we say we're going to double down and actually give you support to like get, wrangle those outstanding investors who are like on the fence, and this is making the difference of you closing your money versus not. So it's a lot. It's an ongoing thing. And also too, I don't know. I just like, I create safe spaces as much as I can where like, I know the guys that I work with do too, but it's like, I can take off my investor hat and just be a human with you too. I have a lot of opinions. I'm like protective of women. I like have so much there, but I'm also like, we can just talk, and like, your personal side of how this experience is going for you plays a huge role in how it all is turning out. So yeah, it's complex.
Yeah, it definitely is. I love that kind of human first approach too. What about on deal flow and sourcing?
Yeah. So yeah. And I forgot to mention this. So like, I've done different things over the years. Like I actually co-organized 2 different female VC groups, both one in Denver, one in San Francisco, and we'll do quarterly events. And it's sort of like, we're always sharing deals, and more women VCs have more female founded deals. So there's sort of that element to it. When I was living in San Francisco, so maybe this was 3 or 4 years ago, I hosted a female and non-binary accelerator literally every Monday for a whole year. And they had like probably 3 different cohorts over that year. So like on one hand, that's helping this particular group, but on the other hand, I really built a deep network that continues to thrive of like those populations. And also too, I'll like take, I'm always making time that I don't necessarily have to talk to folks that I'm like, hey, on average, like deep tech is not the average founder. And so most like a lot of the times you might be off scope for me, but if you're in one of these groups, like I'll still make time to chat and see how I can be helpful. So yeah.
That's great. Well, B Partners, I'm sure, has gained great value out of that, and we're lucky to have you here. So how did you personally live in Colorado, and why did B Partners decide to set up a partner in our state?
Yeah. So it was a bit of an experiment at the start, and I had checked out, Boulder Startup Week. I remember like Natty Zola like invited me to a panel, and but that was my first entry point into this market. And then I had kept in touch with some of the folks I met, and we have a couple founders we've invested out of Denver. So anyways, it was just like on my radar. And I thought, and it was like 3 months into the pandemic. It was literally 2 years ago. So it was July 2020. And I thought, I've been checking out these other regional markets. I think there's really something there. This is the first time ever that venture doesn't have the geographic constraint of it's better to be, in my case, in the Bay Area. So I'm like, okay, this is an experiment. Let's try it on. And I pitched my team on it. I said, here's how I'm thinking, and they were supportive. So then, and this is also before I was a partner, right? So this is like, now that I'm a partner, I have more weight in the conversation. So it was a true pitch of like, this is why it could be cool. And then what I discovered out here that's been so great and why I'm staying is, and also too, like, the cultural aspect of how VC works out here, I really like. It's like give first. It's a lot of partnership. It's like human. So I like that part. But also from a deal standpoint, what I've discovered being here is not just, so one, the Denver market's growing so fast. It's like 300% year over year. It's like really, really fast. So it's a cool, it's a cool emerging, growing, I'd say for early stage, it's a really great market. Like, to be honest, I wouldn't make the same case for a Series A investor, but for us, I'm like, this is an awesome market. And the second, like a couple other points to that is I have gotten access to networks of other regional markets by being here. And that's also like doubled, if not more, like the value of being here. It's like, cool. Well, now I know about Utah and Austin and Chicago and Atlanta. And it's not that I didn't know about them, but it's like I'm more in the mix of those networks. Whereas essentially it's like everything outside the Bay Area is sort of like my favorite stuff to kind of get to explore. And I would say that's overlooked, like you said, geographically speaking. And then I'd say like a final way I still think about being here is I can go anywhere in the country in a day trip. Where if my partner's on the West Coast, if you're going out to New York, you probably want half the week or something. It's like I'm just so nimble, literally by being central.
Yeah. That's great. There's a lot of pride in the middle of the country, startup builders and funders, and it's a market that all grows together, rising tide.
Yeah.
All right. I want to pause and see if anybody has any questions for Kira as we start to come up on time. Please feel free to type them in the chat. Use the Q&A feature here. Maybe in the meantime, Kira, one more question for you. How can entrepreneurs connect with B partners, or how does that conversation look like as people start thinking about pre-seed?
Totally. Okay. I'm going to give you a few links because this is really easy. So one, we have this link and we look at every deal someone submits. So we're very serious about this. It's called Get Funded, and I just put it in the chat. I think that should work. Let me just double check it. Yeah, it does. So one, like, shoot us a note, send it like, hey, I saw Kira on this chat and now I'm, sharing info. So one, just get in touch that way. I'd say the other way, hit me up on LinkedIn and I'm around. And like, I'd say Get Funded is a little more direct into my purview, and LinkedIn, I'm a little slower, but like I check LinkedIn as well. And I'd say another way to do, like, I'd say to be thoughtful with any investor, but with me, it's like, I'd love to know, like, again, if you have nothing to do with deep tech and you still want to chat, tell me why. And if it's like, cool, I've got something to say, I'm still open to chatting. But if it's really something that's closer to where we would invest, tell me a little, just give me something of like how this maps to what we've looked at and the way we think. So I'd say that like extra lens helps a lot to like speed up the conversation.
That's awesome. So that link was getfunded.bpartners.vc. They've been doing pre-seed since before it was pre-seed, which I love. This has all been great, Kira. If no one has any questions, maybe I'll leave it to you if you have any last thoughts for our university researchers, university technologists, any musings from this conversation, but we really appreciate you joining us.
Yeah, happy if someone jumps in, happy to answer questions. But I would say another kind of parting thought would be that as you think about this journey, or maybe you're already on it, I think some of the best advice I could offer is to give and build for yourself the concept of optionality, which is, how do I produce a future, even if it's an hour from now, that has more options than I do in this current present moment? So, I think like that could include, capital efficiency and wisely using and raising capital. Like maybe that's your way of having optionality, because like when you spend less money, you've got more ways to spend it and it looks more attractive. But I could be so many things. Like when I went into VC, I thought I might want to start a company. I was like, in a good way, confused. I was like, there's so many ways I might go. And one of my business school professors, who's just this incredible mentor, said, I think you should solve, it was his advice, so it wasn't telling me what to do, but he said, I think you should solve for optionality, meaning if you go into VC versus say, joining a startup, starting one, you're going to see, I see 2,000 plus deals a year. You're going to, like, if you end up wanting to go the startup path, you were going to be so much better informed to take that path if you start in venture than if you just like do whatever you're talking about today. So yeah, I think optionality is magic, and I recommend it.
I love that. That's great personal advice, great startup founder advice. Yeah. This has been a fantastic conversation, Kira. It's so good that we have you in our Colorado startup ecosystem. Yeah. I'm grateful that you pushed that. Really excited to keep in touch with B Partners. Anyone on the call, anyone listening after the fact, reach out to Kira on LinkedIn. You can find us through your university and we can connect you as well. But Kira, we really appreciate it, and we'll see you around soon.
Awesome. Thanks for inviting me, Emily, and great to be with everybody on the audience.
Awesome.
Cool. Thanks so much.
Bye-bye.